Welcome to Cattle Call here on the Rural Radio Network. I'm Susan Littlefield. No, I am not camping as it looks like behind me. I am in Wisconsin at their Wisconsin Farm Technology Days. It's taking place in Clark County, which is kind of just to give you an idea, from the Twin Cities, it's probably about a good 2.5 hour drive, maybe close to 3 hour drive from the Twin Cities. A great 3-day farm show that's taking place here. And of course, talking cattle a lot with a lot of folks, both from the dairy perspective and the beef perspective. We're going to talk about what's happening today with the feeder cattle. What's going on with the funds as they've been on the shorter side. Cash market, is it doing as good as what we might be seeing on these cash feeders? Well, we got to bring in the expert for all of that, and that's Brad Kooima. Brad is with Kooima and Varlick out of Sioux Center, Iowa. So let's start talking about this news. What's going on with the feeder cattle market?
Well, I think it's a great place to start. By the way, how are the s'mores and stuff?
No s'mores.
Chilly, huh? Yeah, it's not so chilly here where we are. It's going to be a hot one here in Northwest Iowa. I think you picked a good spot to start, because I really thought that the market kind of began and ended yesterday and today both with an extremely strong feeder cattle trade, and you know. There's an old saying, I guess, when you whip the horse, he'd better run. Interesting on the feeders, particularly today early when you had the grain markets trying to have a pretty big correction to the upside. Feeder cattle were higher anyway, which is contrary to the way it's been lately. Of course, feeder cattle futures highly impacted on what the last movement on the corn prices are. But this cash feeder market is just absolutely on fire. So unless you've been on Mars the last few weeks, that cash feeders are extremely high, and a couple of auctions going on today, a video as well as a big sale at Bassett. They are on fire, and knowing what that does going into the feeder cattle index. So you actually have some reinforcement of this higher futures action with what has also been a very strong cash feeder trade. Now, some of us are old enough to remember the old phrase, Susan, feeders are the leaders. A lot of bull markets are foretold or started with strength in the feeder cattle market. We've talked about the building base of less supply because of the female liquidation, the cow kill, as well as the heifer slaughter many, many times on your show. And so whenever the market starts up, there are some of us fundamentalists that say, well, this is a futures market. We are trying to figure out what's going to happen instead of reacting to what happened yesterday.
Do you think this momentum that we've seen in the cash feeder market can continue, and not only this week, but in the weeks to come?
Boy, everybody keeps saying, well, it's July. This isn't when we usually start to rally. We got to work through some cattle, and we do. There's a supply of calves that we still have to kill, although we've got them pulled forward 30 to 45 days, at least in my backyard here. And we're as current as we were in 2014, which, 2014 is quite a year. I would mention that that bull market actually started in May of 13. That was when we made our low. Spoiler alert, we made a low in May this year too. Okay, doesn't happen very often, like twice out of the last 15 years. So I don't know, but there's so many of these pieces of the puzzle that are starting to fall together. I guess I would be a little bit cautious and say, well, let's see how we handle some of this. If it wouldn't be for the gorilla in the room, which is recession, right? High price gas, inflation worries, what that does to the spendable dollar. Were it not for that, I think, I could maybe, get a little more brazen and say, yeah, here we go, lock and load. But let's see what this thing feels like the next 45 to 60 days. But I do like the market a lot down the road.
But, you look at the way the cash on the feeder perspective has been on the hot side, these fats have started to really see a decline.
Yeah. Most days I sit here and I go, well, shucks, the news is really pretty good. And the futures sure didn't trade very good, did they? Why is that? And then we blame the funds or something. And they reverse today. Cash market is softer. I traded cattle today in Nebraska and in Iowa, my own, at 145. I got 148 last week. So it's 3 lower. I can do math. And yet The futures acted pretty salty in spite of that. Now, some of that, of course, is because we had such a ridiculous basis here for so long, Susan, that it's kind of ironic, though, that now that the cash market is starting to tip over, we're actually having the futures market try to come up and meet us someplace in the middle. It wasn't a runaway. We were only 20 higher and closed off our highs by 50 cents, but still closing positive, I thought, on a day when you had a CPI out this morning, which is bearish. The stock market rocked pretty hard early. Now it's come back some later. And after a big rally, I thought, this futures thing could get a little tricky today, but I thought we handled ourselves pretty good.
Do you have any inflationary fears at this point, Brad?
You have to. I mean, to be realistic, wondering what that does, to the spendable dollar, or the has always been viewed as demand being elastic for beef, but I question whether that whole paradigm is still right. It's funny you've asked me that, because I spent quite a bit of time talking to two different, bigger economist type thinkers today about this very topic. And it started with discussion on why is the choice select spread $24, if $26 actually. So if we either don't have any choice cattle, which I think is questionable. I mean, it's July. These cattle have been fed a while. Maybe they haven't been fed as long as normal, but, there's some choice cattle, of course. Or we've got exceptional demand for choice cattle. And is that driven by the demand for prime and high choice? So is there a segment of and I don't mean to be crass here, but is there a segment of the population that if inflation, recession doesn't worry them? Okay. That they're safe from that stuff. And if so, does that mean that you're going to drive that middle meat demand irregardless through the thing? There's probably an argument for that. And the other side of the end of the spectrum on the beef thing is the hamburger side, which the demand for hamburgers, Susan, is crazy good. I mean, it is really good. And look at the cow meat. Look at the price of these shelly old cows. And that, I think, is more of a a budget-friendly type of a deal, as it compares to pork and even chicken. Hamburger is pretty competitively priced. So I don't know, if I had to just stop the Polaroid camera today, I'd say demand looks like it's fine in spite of the worries of recession.
All right. Well, thanks for joining us this week. I want to prove to everybody that I am not camping and that I am at a farm show that is taking place. So lots of things happening here. Brad, thanks so much for joining us this week.
Of course.
I always want to remind folks that commodity futures and options do involve a substantial risk of loss that aren't suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.